during this last quarter. If we recall our previous quarter, the last quarter of 2025, saw both indices, business and consumer, falling for fairly obvious reasons. We had a disastrous third quarter with the hurricane, and it had a knee-jerk reaction on the business and consumer confidence. So we were all about resilience and recovery in our last event, and today we will find out how we have done, the progress report on our efforts to restore and return to the high heights in business and consumer confidence which we were at just prior to, at the end of the third quarter 2025. Special recognition again to our sponsors, GK Capital Management Limited, to Sean Coy, Senior Investment Banking Analyst at GK Capital, and of course to our main presenter, Mr. Don Anderson, Executive Chairman of Market Research Services Limited. Also, to our panelists, Ms. Christina Millington, representing GK Capital, and our panel, three gentlemen who have their both hands firmly on the steering wheel of the economy. And we are hoping to hear good insights from them. Honorable Minister Delano Seabright, Minister of State in the Ministry of Industry, Investment and Commerce. Thank you very much for being here, sir. We know you have a very tight schedule. Honorable Patrick Hilchon, President of the PSOJ, and congratulations again. And of course, none other than our own Christopher Jarrett, President of the Jamaica Hotel and Tourist Association. We have a lot of people online, and welcome to the persons online as well. And I'll remind the panelists that the people online are really looking to figure out what to do in their own businesses and in their own consumerism. And they're seeking guidance from us in terms of what to do to navigate these difficult times. So we rely on your experience as well to share the information with us that will help us to get back on track. All right, so we're now going to ask our gracious sponsor, GK Capital, represented today by Mr. Sean Coy, Senior Investment Banking Analyst, to bring the sponsor's remarks. Please welcome Sean.
Good morning, everyone. The Honorable Delano Seabright, State Minister in the Ministry of Industry, Investments and Commerce, our other distinguished guests, including members of the Jamaica Chamber of Commerce, panelists, registrants in the room and online, members of the media and friends, thank you for joining us today. It is our pleasure at GK Capital Management to once again partner with the Jamaica Chamber of Commerce in the release of the Business and Consumer Confidence Indices, which continue to serve as an important barometer for Jamaica's economic pulse. This quarter's theme, Financing Jamaica's Future, how tourism performance shapes business and consumer financial confidence, is especially timely. Tourism remains one of Jamaica's most powerful economic engines. Its performance influences not only foreign exchange inflows and employment, but also the confidence of business owners planning investment, households managing spending, and financial institutions allocating capital. When tourism is strong, confidence tends to follow. When it softens, the ripple effects are felt across sectors. As an investment broker, GK Capital sits at the intersection of capital, confidence, and growth. We see firsthand how sentiment shapes financing decisions, whether for expansion, innovation, or long-term resilience. Today's discussion invites us to look beyond headline numbers and examine how tourism performance translates into real financing opportunities for businesses, MSMEs, and the wider economy. The insights shared through the JCC indices, combined with perspectives from our distinguished panel, help policymakers, investors, and private sector leaders make more informed decisions that ultimately drive sustainable growth. We commend the Jamaica Chamber of Commerce for its continued leadership in producing these critical indices and we thank our panelists for contributing their expertise to what promises to be a thoughtful and forward-looking discussion. At GK Capital, we remain committed to supporting dialogue, data-driven decision-making, and innovative financing solutions that help build confidence in Jamaica's economic future. Thank you for being here this morning, and we look forward to the discussion.
Thank you, Sean, and thank you again to GK Capital for being our gracious sponsor, ongoing. All right, Minister has been asking me what the results show. The time is now. Please help me welcome Executive Chairman, Market Research Services Limited, Mr. Don Anderson, who will bring us the results of the first quarter 2026 Business and Consumer Confidence Survey.
Thank you very much, Andre. The minister must be very anxious because the first thing he did when he sat beside me, he says, "What is it looking like?" All right? So you don't have much longer to wait. Thank you all very much. Good morning, everybody. Honorable Minister, distinguished persons at the, I almost said head table. I think before I share the results with you, I think we should make the point that, and Andre needs to do it as well, that we're now in the 25th year of the presentation of these indices. And save for 2 quarters when the original presenter, Professor Richard Curtin from the University of Michigan, was ill, we have produced this set of data consistently. And therefore, we're pretty close to 100 quarters of information that we've been presenting. So a little bit of background quickly. We have traditionally conducted a survey amongst businesses, in excess of 100 businesses, and for the last period, despite all the challenges that businesses currently have, we interviewed over 110, 115 businesses. And amongst consumers, we interviewed 620 persons across the island in a nationally representative sample, which means that from the data we got from the interviews, we were able to project up to the total population of businesses and of persons in the country. So this is the data, and I will share with you now what we found in the first quarter of 2026, bearing in mind that we're coming out of a period of severe difficulties created by the onslaught of Melissa. So we're going to chart, first of all, the consumer confidence, first quarter of 2026. And the minister will be happy to hear that consumer confidence rose. Consumer confidence went up 5.7 percentage points over the last period. We can see that reflected in the chart, that upward tick coming off a very precipitous decline in the last quarter of 2025, again, as we know, occasioned by the challenges that Melissa presented. So, first thing to note is that consumer confidence was up 5.7 percentage points, just about 6 percentage points, over the last quarter of 2025. We can see from 2001 what that chart has looked like. So it's pretty much up and down. And why it is up and down is that consumers tend to react very quickly to changes around them, changes in the economy, how they perceive businesses, how they perceive their own situations. And as a result, we find that consumers have a kind of knee-jerk reaction to changes in the economy and businesses. And that is what occasions this kind of zigzag pattern in consumer confidence over the 25 years of the study. So let's look at some of the key factors, the key indices that, in a way, drove that overall index. So how do consumers feel about current business conditions? In the middle chart, we see the results for quarter 1 of 2026. And what it says is that quarter 1 in 2026, consumers felt better about business conditions than they did in the fourth quarter of 2025. And again, not surprising. It was total depression coming after Melissa, And that is what was reflected in that fourth quarter of 2025. Consumers are now beginning to think that we're coming out of it, all right? So that perception of current business conditions amongst consumers rose from 12.6% up to 16.8%. However, it's not back to where it was in quarter one of 2025. So before we sort of jump and click our heels about consumer confidence, we need to bear in mind that it is coming out of a slump, and therefore we can see that 4% increase in the index, but it is not back to what it was in quarter one of 2025. What about the current job situation? We know that consumers have never been very optimistic about jobs. They have very been pessimistic, in fact, about job prospects. So when we see a movement in, how consumers feel about jobs, it is something to be positive about and to really, be happy about. Here we are, a situation where jobs have never been considered to be plentiful. We can see that from that top bar. In first quarter of 2025, 11.7% of consumers said that jobs were plentiful. That fell to 9.1% in the fourth quarter of 2025, understandably, and we know the reasons why. But that didn't pick up at all. In fact, it fell even further in the first quarter of 2026, down to 8.2%. So consumers maintain that kind of pessimistic approach, pessimistic view, pessimistic outlook of the job situation. They've never felt it was plentiful. And again, all these indices point exactly to that reality. But what about business conditions? What do they expect of business conditions? And again, I'm not going to mention it again. Coming out of that slump in fourth quarter of 2025, consumers are a little bit more optimistic about business, 37.2% as against 35.6% in the fourth quarter of 2025. But again, notice we're not out yet. We're not out of the thunderstorm yet. So that number is not up to 39.2% as it was in the first quarter of 2025. So we're comparing two things. What happened over the last quarter and how the current quarter compares to the last year, same time. So we're not back there yet. But it is happy to note that consumers are feeling better about the conditions and expect conditions to improve as far as business is concerned. So what about the job situation? Consumers feel more positive about jobs coming on stream this quarter than they did last quarter. And we see there's a certain degree of similarity in the way in which the data is going because it is pretty consistent throughout as far as the consumers are concerned. They feel better about the situation now than they did last quarter, but not as good as it was in 2025 first quarter. Very, very similar all the way through. What about your own personal situations? In addition to asking them about the economy and how businesses are faring and how they feel businesses are faring, we ask them, what about your personal situation? What do you expect? That's up from 51.4% in fourth quarter of 2025, up to 54.6%, but not again anywhere near the 58.9% in first quarter of 2025. Pretty much consistent across all of these indices that we've been looking at. And these indices feed into the overall positive of that 6 percentage points where consumers are now more confident in general about what's happening around them. So a chart that obviously GK and entities like GK would like to look at is what about the propensity now to spend? What do you do? What are your plans to purchase? That is up, happily, from 11.6% in the fourth quarter, depressed economy, up to 13.4% in the first quarter of 2026, but not back to the first quarter of 2025. But things are progressing very much a very logical pathway, as you can see from the consumers. And consumers aren't necessarily logical. We aren't logical. Not in our purchase patterns, etc. But we're seeing a pretty consistent pattern throughout, which fed into that 5.7% improvement in consumer confidence. This is a pretty telling chart, actually. It's the first time we're presenting this, but it was useful. We looked at it and we said, okay, so what are consumers thinking? expectations for the economy in the next 12 months. And we noticed that in the third quarter of 2025, that gap was extremely wide. But again, who remembers what happened in the last quarter in September of 2025? Delano, you would be very aware of. It was the election. So during that election period, consumers' expectations are really very strong because they fed a lot of promises, etc., some which don't materialize, some which do. And consumers have tended, and there's another chart that we have shown sometime to look at how consumers feel about the economy during an election year. And over that 25 years, we have seen some serious peaks election. But here's what happened. Consumers expected the economy to be really strong in that September period. So that gap in September, in the third quarter of 2025, 51.2% expected things to get better. Only 16.5% expected it to get worse. Where are we now? Very narrow gap between those who expect the economy to get better and those who expect it to get worse. 36.3% said they expected to get better. 32.6% said they expected to get worse. Signs of the times, and again, it's all as a result of the challenges that we faced as a country coming out of Melissa. But that's a very telling chart. So, big factor, prices. We've never generated this chart, and it doesn't say that at least 9 out of every 10 persons feel or say that prices were higher over the last year and expected to be just the same in the coming year. So what have we found? 70% said prices increased significantly, 24% increased moderately, so 9 out of 10 persons said prices rose. So we're talking about what people are facing as they try to make ends meet in an economy such as ours. So we found that, and again, we started to plot this in 2013, and through the wisdom of the Chamber of Commerce, we couldn't understand some of the indices that were coming back at us, and the great idea came from the Chamber. You know, let us look at remittances, and we've found that this particular chart, this particular data on remittances has shed a lot of light on what's happening to persons and their disposable income and their way, the means by which they try to make ends meet. So we had a peak of 35% of households receiving remittances in 2020, COVID. Now, that has never gone back anywhere near that. And in fact, over the last year and currently, we have 28% of households receiving remittances. And that has a serious impact on people's ability because we've also plotted data which shows that very little of what people receive in remittances is saved. Much of it goes towards meeting daily household expenditure. And therefore, it's a band-aid solution for a lot of people, okay? In 2025, 30% of households indicated that they received remittances. That is down to 28% at this point in time. Of course, we have 3 more quarters to go, so we're not quite sure where it's going to pan out, but it is important to note that those numbers have not gotten up back to the 35% in 2020 since then. And of course, the worldwide, right across the world, and particularly from the countries that we receive our remittances, they had challenges as well. And that was what resulted in that dramatic fall-off between 2020 and 2021, where 29% in 2021 compared to 35% in 2020 was the beginning of that flattening out of the incidence of persons who received remittances. So that's very important to note because a significant percentage of the population that receive remittances use it to meet their daily household needs. That's a very important piece of information. Tourism. So each quarter, we tend to focus some questions on a different sector. In this particular quarter, we looked at some questions to do with tourism. So what do consumers feel? How do they feel about the impact of tourism on economic growth of Jamaica? Obviously, we look at 25% who said it's significant, 33% who said it's strong, and therefore we have, 58%, the majority of persons who believe that tourism cements its place within the whole economy of Jamaica and is a very critical factor in our obviously, in our growth and development. Very few people didn't think it had impact. That's 6%, of course. So the majority of persons are convinced that tourism has a big part to play in our economic growth. What's interesting is when we ask consumers how prepared are businesses in agriculture, tourism, and financial services to adapt to challenges and opportunities. And what we find is that there's no real conviction that businesses in agriculture, tourism, and financial services are prepared, are ready to face challenges. In other words, there's a gap between the possibilities that exist for challenges and the preparedness of businesses to respond to those challenges. So that's a gap and something that needs to be looked at. So 39% felt that they were moderately prepared, 34% slightly prepared, but when you look at those two top bars, only 7% feel that businesses in tourism, financial services, and agriculture are prepared and capable of responding to challenges and opportunities. So they're not likely to be responsive depending on the situation, but they're not likely to be responsive is what is being said. So should Jamaica prioritize tourism for climate resilient investment? 21% agree strongly, 35% agree moderately. And we made sure that people understood this question by obviously explaining it to them in writing. And therefore, we know that people understand what they're looking at right here. So what is being said? 21% say yes, Jamaica should prioritize tourism for climate resilient investment. 35% agree moderately, and therefore there's no real strong conviction that this should be done. But again, you want to take a look at those two top numbers and say, well, if you add them together, you get something like 56% who believe that yes, we should focus on prioritizing tourism for climate resilient investment. So that's as far as the consumers are concerned. Consumer confidence up, clearly coming out of a dip in the last quarter of 2025, which Melissa occasioned, but consumer confidence is not back up to where it was in the first quarter of 2025. So we're on a good trajectory, and the good thing is that consumers are feeling more positive than they did in the fourth quarter of 2025. That's the takeaway. So I want to look at business confidence now, and remember we interviewed 115 businesses across the country, and they're broken down by different types of businesses, so we have a good spread of businesses, types of businesses, to be able to reflect upon the data. What we find, businesses are indicating that they're not as confident in the first quarter as they were prior to the start of the year. Now, whereas consumers tend to look at their whole situation and tend to react in a kind of knee-jerk way, and that's obvious because they have to look at things in front of their faces. How am I going to go to the supermarket or the grocery tomorrow and pay for what I need? So the consumers are a very knee-jerk reaction to changes, prices, and obviously it impacts them, so therefore they make changes. Businesses obviously are more long-term visionaries and long-term thinkers, and therefore they're slower to react to changes in the economy around them. So whilst businesses are saying, yeah, we're moving out of a bad period, occasioned again, as I said, by Melissa, we're just not where we would like to be. And therefore, business confidence is down by 6.5% over the last quarter. So then they aren't seeing the levels of recovery that they would like to see, and therefore they are long-term thinkers. Know that it's going to be a long haul. Lots of disruptions have taken place in the business environment, and as a result, they are very slowly reacting to the situation, which reflects in that 6.5% decline in business confidence. We look at it across the last 5 years from 2022 to now, and we only have one quarter so far, but the index of business confidence is 124.3, down from 136 across 2025, including, of course, the last quarter. So we see we're coming from a high of 114 in 2023, was when we were booming with, booming is a very subjective word in a way, coming out of COVID. But business confidence rose to an all-time high in 2023, 140. We're now down to 124 first quarter of 2026. So we see and we wait and see what the next sets of quarters will bring. So, interestingly, we now ask, what about your current profit situation? Is it better than expected, as expected, or worse than expected? In the first quarter of 2026, only 14.8% said that profits were better than expected, down from 22.4% in the last quarter of 2025. So you can see businesses are they're always cautious because they think long term. But here they're saying, well, you know, we're still suffering from the impacts of Melissa, and we're still a far way away from what we expect in terms of profitability. So we're not there yet in terms of business, and that is what they are saying. So is it a good time to invest or not a good time to invest? That number is down to its lowest over the 3 periods that we're looking at here, 50.8%. Well, you may want to take some comfort and say, well, 51%, the majority of businesses still feel it's a good time to invest. We'd be surprised and worried if that number was lower, because then we would know that businesses are pessimistic, but they aren't. They're saying we're realistic. What we're doing is we're mapping our movement and our progress over a point in time, over periods of time, and therefore the majority of businesses still feel it's a good time to invest. It's down from that 53.7% in the fourth quarter even, and significantly down from that 55% in the first quarter of 2025. But the majority still feel it's a good time to invest, and that's the takeaway from this particular chart. So what about your finances? How do you feel going forward? Do you think your finances are going to improve, remain the same, or worsen? And again, the lowest incidence recorded is in that first quarter of 2026, where 62.5% say we expect our finances to improve. But it's down from 70% in the fourth quarter even of 2025. But the important thing, again, the important takeaway, against the background of the fact that there's a 6.5% fall off in business confidence, that businesses expect their finances to improve. So businesses are thinking positively, despite the reality that they are not back to where they would like to be coming after Melissa. Again, what about profitability? We can see that there's not a lot of difference between the expectations of profitability improving. In the fourth quarter of 2025, 64.8% said they expect their profits to improve. It's down to 60.2%, not a huge difference, and therefore businesses are still buoyant. Their reality is that it's not as confident, and the reason is that they're still dragging themselves out of the impact of Melissa, and they're not where they would like to be, but they're still positively looking forward to, again, because they're visionaries and they think long term. Actually, because you all are, because you're all in business here. What about the economy? Do you think the economy will get better, or will it remain the same, or will it worsen? 43.8% in the first quarter of 2026 said they expect the economy to get better. That's down by 10 percentage points from those in the fourth quarter of 2025. But it is better than the first quarter of 2025. It's a very interesting piece of data. So that, again, is all a question of a wait and see. We know we're in there for the long haul, and we know that we have to be patient in terms of our recovery, but we believe that it will happen, and we're not quite sure how long. We're not going to say 3 to 5 years, but businesses are saying we know that we have to wait this out and be positive about the whole situation. What about prices compared to last year? And businesses, of course, are saying, you know, with all the supply chain challenges that we're facing and all that's happening, and we're very interested to see what the next quarter will bring based on what's been happening this first quarter in terms of wars that are taking place around. But businesses are saying, yes, prices have increased significantly, and just like the consumers, because everybody is feeling it one way or another. All right? So 53 52% said prices have increased moderately, but 35% said prices over the last year have increased significantly, and that is something to note. All right, but again, if we pull that slide out, it's down by 5 percentage points against the fourth quarter of 2025. So again, to note, both consumers and businesses are concerned about price increases and know that this will impact their lives on the one hand and their businesses on the other hand. Okay. So we asked the next question. We didn't ask this of consumers, we asked this of businesses. What about the next 12 months? Do you expect prices to increase, remain the same, or fall? Well, nobody expects prices to fall, really, and 92% expect prices to increase. Again, I'm sure some of that would have been captured by what is taking place in Iran and elsewhere, and the impact it is having on businesses worldwide. So 92% higher than those who saw prices going up over the last year. 92% now expect prices to increase because of challenges and climate change problems and practical situations that they are facing. So, a question that we introduced rather late in the day, I think maybe about 3 years ago. So what about your plans to increase capital investment? And we can see the sectors that are now saying that they intend to increase capital investment. When we look at the last quarter to the extreme right, we find that the key sectors are farming and agriculture, including mining and quarrying, and manufacturing. These are the two sectors that are sticking out, and almost the two sectors that were there last quarter as well for 2025. So 62.5% of the farming community say they intend to increase capital investment, same number as the manufacturing sector, and with those good numbers. And what's important is that the majority of sectors that we interviewed say that they do plan to increase capital expenditure investment over the next year or so. So this is good data, and I know that Grace Kennedy GK will be very happy to see all this kind of information coming back, because obviously it's important to note. So we always plot this because against the background of what people say they're going to do and businesses say they will be investing in new capital expenditure and so on, what do you see as factors that are likely to impact that decision? And they list a range of factors. These are all unprompted. We don't give them any opportunity or any answers up front. We simply say, what are the factors that are likely to impact your capital investment plans? And we track the answers that they give to us. So these are recorded in order of importance. High input costs, 16%. So they give a pretty wide range of responses. 14% lack of funding, access to finance. 9% lack of revenue or cash flow. 9% shortage of qualified skilled labor. We heard the Prime Minister talking about that recently. 9% stagnant economy. 9% high interest rates. So there are a fair number of numbers going all the way down to 4% weather conditions, climate change situations, and only 4% cost of foreign exchange. So here we have a pretty long and a pretty good list of reasons or factors that people say will impact their decisions to expand and spend more money in building out their own businesses. Important to note. So, same questions we asked of the consumers, we asked of the businesses. What do you see as the impact of tourism on economic growth in Jamaica? And we have, 83% who are either strong or significant. So these are persons, almost 4 out of 5, more than 4 out of 5 persons who are saying, yeah, I believe that tourism is a very big player in the economic growth of our country. Very strong conviction there. So, question again, we ask of the consumers, we ask of businesses. How prepared are businesses in agriculture, tourism, and financial services to adapt to challenges and opportunities? And 59%, largest single factor here, says they're only moderately prepared. So there's room, obviously room. And only 10% feel that there is proper and well-drilled preparation for such eventualities, whether challenges on the one hand or opportunities on the other. So this is a very important piece of information. And again, it says that businesses are thinking very much like consumers in this particular factor here. So should Jamaica prioritize tourism for climate resilient investment? 55% agree strongly and 29% agree moderately. So there is obviously very strong agreement, 84% who are saying absolutely so. And so on the one hand, we're seeing where tourism is seen as very important to economic development. No surprise, people aren't convinced that they're ready to take advantages or to face challenges. And they believe, without a question of a doubt, 84% say that Jamaica should prioritize tourism for climate resilient investment. That, ladies and gentlemen, represents the presentation of the data, the raw data from the survey, and I'm sure that it has generated a fair amount of thought and therefore prompted quite a few questions. And I think Andre will now take over at this point. Thank you very much for listening.
Thank you very much, Don. A lot to unpack there. Business confidence down, consumer confidence up. Some amount of preparedness for other climate-related events, but certainly a lot of work to be done. Thank you very much again, Don, for the rich information. Minister, I'm going to ask you to take the mic first. Given, I think you know a little bit about tourism. Given a general comment first on the business and consumer confidence result that you just saw, and as it relates to the tourism's current performance against the recovery efforts. What are how is the tourism's current performance shaping the business and consumer financial confidence in Jamaica? Are we where we're supposed to be now, given where we came from? So a general comment on the results first, and then you can speak a little to the tourism sector.
Yeah, thank you so much, and thank you, Don. I'm assuming this was done in March, the actual survey.
I should have mentioned the fieldwork dates.
Yes.
January to March.
January to March. So, of course, we're just under 6 months from the impact of one of the most significant hurricanes in history, causing 215,000 structures in this country to be damaged at varying degrees. 600 schools impacted out of over 1,000. In dollar terms, estimates $12.2 billion US, or just about $1.95 trillion negative impact on the economy. And beyond that, the housing, agriculture, MSMEs, the tourism sector, certainly in Western Jamaica, and utilities and so on, very badly impacted, primarily in Western and Central Jamaica. So that's a context within which we frame these results. As we move forward, confidence is important. 2005, Hurricane Katrina hit New Orleans, and there's a consistent theme in terms of the reaction and the feeling of how government has functioned after a natural disaster. So 2005, we had Katrina in New Orleans. 2010, Haiti earthquake, 200,000 plus dead, destruction of Port-au-Prince. 2015, the Nepal earthquake, significant destruction. And of course, 2017, Hurricane Maria and its impact on Puerto Rico. And there's a consistent theme throughout. There's a sense that where there's government chaos, a lot of bureaucracy, inability to make decisions, poor leadership, poor management, poor execution, and so on. That's what, once that cements within the first 90 to 100 days following a natural disaster, then you go down. So I'm happy to see that the consumer confidence numbers are looking strong. The businesses, of course, are cautiously optimistic, or cautious in general, and have a much longer term view. The fact that the government was able to announce that we have secured roughly up to $6.7 billion US in financing from our multilateral institutions like the World Bank, IMF, CAF, IDB, CDB, etc., was a positive signal to put out there, certainly for the business community, to show that Jamaica's fiscal discipline and economic management over the years is regarded, and we have been rewarded for that in a time of extreme crisis. And then following up to ensure that we were responsive as it relates to getting the utilities back online. I remember Chris and I, all of us, were on the phone lines every day with the Jamaica Public Service Company, Minister Vaz, the Prime Minister, everybody, trying to ensure that we move at a very high speed to get the utilities back online and to get over 98% electricity reconnected in 4 months after a natural disaster like that is really an impressive feat. It really is. Puerto Rico, when they got hit by Hurricane Maria, which was a Category 4 storm, and of course Puerto Rico is a part of the United States, it took 11 months for electricity to return at 100%. So it was a major achievement. So we had to move very quickly at sending the signal as quickly as possible that we are responsive, we're on top of the problems, and we're getting Jamaica systematically on track. And of course, I don't want to belabor the point, but NARA is also another addition to that toolbox of solutions to some of the challenges that we're faced. So I think that has been a big plus.
Yes. So ask you about NARA.
Yes, I know.
President Jarrett, Christopher Jarrett, President of JHTA, what metrics are you guys using to measure, to indicate recovery in the sector versus this kind of a short-term rebound? Where are the analytics that you're using to figure out where we are now versus where you want to be?
We're looking at arrivals. We're looking at rooms, available rooms. We're looking at rates. And so it's a mixed bag right now because although we are seeing strong occupancies in the West, the available rooms are not in keeping with where we would want to be. So although they're seeing 80s and 90% occupancies, that we believe is as a result of the shrinkage. And we're hopeful though, optimistic, cautiously optimistic about the direction that we're going in, because we see that in the Caribbean, the ADR generally is up. And so the hotels, we don't think, and the attractions don't need to be discounting rack rates at this time. But so those are the things, the matrix that we look at in sort of gauging where we are at this time.
Given what is happening, Chris, in the United States, Europe, the Eastern Bloc, are we confident about our resurgence based on the unfortunate circumstances happening elsewhere in the world?
Again, I want to say we're cautiously optimistic. We along with JTB and other players, of course, the government, doing whatever it is that we think we need to do to position ourselves. We think that this geopolitical space where we are now is going to cause some disruption with respect to the traffic that we think we would have expected to see. So although people still prefer the Caribbean, and Jamaica is a brand of still a very strong brand, that we're seeing that people, although they may not want to travel to Europe or the other places, they're still focusing on Jamaica. I mean, when you look at the Caribbean in general, Jamaica is still a preferred brand. And so I think it's going to take a bit of juggling for us to continue to have the traffic directed to us. Although our cost for the heads in beds is going to be generally less, we are still faced with the challenge of the spiraling costs. Fuel costs are going to be driving the airlift costs. And the airlines don't want to invest in a space that doesn't have the ability for the guests to be able to have rooms. So we have to also be working as quickly as we can to get the balance of those 20% back in the pool.
Thank you very much. President Patrick, welcome again. Thank you for being here. Honorable Patrick Hilton. We are hearing really that tourism tends to drive the recovery, and it pulls other sectors with them. To what extent, President Patrick, is tourism recovery translating into renewed confidence and expansion into other sectors of the economy, based on what you're seeing happening with your membership?
Sure, so thanks for the question. Let me say one thing first. I think I may ascribe it, if I'm correct, to Churchill, who said that I'm an eternal optimist, and I find that there's little value in being anything else, right? I think it's important for us to engender a spirit of optimism. I think a lot of times it is occasioned by people getting the right sort of messaging and the right sort of data and the right sort of indicators, because it's easy to get lost in the negativity of the situation or the circumstances. I'm very happy to see what is happening on the consumer side, right? And I think the challenge now is how do we translate that into the business side, right? I don't think anybody or many people, we see some people who obviously have a different view from the statistics, would argue about the potential impact of tourism on the economy and about its significance, right? It speaks for itself, quite frankly. Just how pervasive it is, the size of the investment in the industry, the number of players who are affected, both businesses, whether they be businesses that are adjacent and supply to the industry, individuals who are hired within the industry, even in the financial services sector in terms of lending opportunities. But even beyond that, if you look at the bond markets for some of the bonds that are out there, like Mobi, Air, and so on, and the impact that it has. So the impact, I think, the significance of it is beyond question, right, and well established. What I think, though, is that, part of what is affecting this is not just Melissa and the Melissa impact, but as you referenced earlier, the whole global situation, right? Whether it's the geopolitics of it, the war, the increase in energy prices, the uncertainty. And so, like with everything else, we have to look for where's the opportunity in this context, right? What are the things that are important enablers and facilitators of business confidence and of business resilience and business resurgence, and then see how collectively government, civil society, the various associations can work with their constituents to help to understand and to address those factors that are negatively impacting them. So we can recreate the positivity and use that momentum to drive our future prospects going forward.
Thank you very much. Certainly, this recovery has to be financed, and we have gotten quite a bit of help from external and internal agencies. But Christina, generally speaking, how is the financial sector, what is being done to support the tourism-related businesses in accessing capital for recovery and growth?
So as Minister Steve Wright mentioned earlier, from a financing perspective, immediately after the hurricane, we really focused on ensuring that there was adequate liquidity and there was stability. So within the GK group at the bank, immediately companies operating within the tourism industry, tourism adjacent spaces, we offered, moratoriums, we were flexible, allowed clients to reassess, if they needed more time, less time. As simple as it may seem on the operational side, one of the things that we did was ensure that customers were able to get back their point of sale machines. Yes, that was something that we did, to get companies transacting again. Now we're in the phase that we're moving towards longer term capital for rebuilding and infrastructure, and we want to ensure that this rebuilding and infrastructure is done in a methodological way, it's done properly, it's done improved. Personally at GK Capital, on the investment banking side, we are committed to designing products, and we can be as flexible as needs be to fund these infrastructure and rebuilding projects. Tourism also has like strong linkages throughout the entire economy. So at GK General, which is our insurance company, we have a parametric insurance product that's for the farmers, because we need to ensure that if there's a weather event, we see a lot of rain happening now, if there's a weather event, that the farmers can quickly get back on their feet to support the tourism industry. So that's something that we're doing within the financial space. And moving forward, we spoke about the capital markets, we spoke about the bank, spoke about the insurance, but the multilaterals are also on board. The IDB and the World Bank, they have committed both capital and also technical advisory services. So in terms of those technical advisory services, they have teams of professionals with all the relevant expertise to ensure that this rebuilding is done correctly and will set us on a proper path. And then another thing is, and we saw it in the indices, so the liquidity is available. The financial sector has made sure that the liquidity is available. We saw that business confidence has pulled back a little bit. There were, some doubts in terms of investing for expansion, the ability to take on more loans. But from the financial perspective, the liquidity is available. When we look at the data, we see that 50% of the recovery funds were accessed by tourism and tourism-related entities. So that just goes to show that the funding is available. Of the funding that we put out there for recovery, 50% of it was accessed by tourism and tourism-adjacent companies. So the funding and the liquidity is there, and we stand ready to assist in any way.
Thank you. Don, quick one for you. In asking the question about what is required, we normally have a question concerning what would you require to propel your business, propel your investments? What government intervention would you require? Normally we get an answer to do with government investing more. Was that question asked this time, and was there a response?
No, that question was not asked on this particular occasion. All right, so we can't really provide you with any information that would compare previously. Okay,
okay, thanks. As we speak about financial risks, Patrick, we do have a tourism-dependent economy. What risks has this hurricane exposed, and how should we mitigate them, led by the private sector, of course, in terms of diversification?
I think one of the things we saw was the immediate impact, right, of the physical damage, right, and what it did to plant and operation. We saw that not only in terms of the hotels themselves, we saw that in terms of those who supply the hotels, right? And one of the challenges that I am hearing about in that context is access to insurance facilities and the pace at which insurance proceeds can be made available or are being made available. And then in some instances there is underinsurance, right? So when I look at it, I said to myself, what is the opportunity here? Right? The opportunity has to be to ensure that we use this experience, right, as a basis in rebuilding to build institutional frameworks or institutional arrangements which guard against and facilitate better insurance arrangements, speedier resolution of claims, right? Higher levels of coverage, which is part of our whole process of educating people, and also looking at the cost of insurance, which sometimes is a disincentive for people to want to take out insurance. And within that context, to start to build, there's constant reference to resilient tourism networks, right? And resilience comes across a wide spectrum, right? Whether it is physical in terms of the nature of the infrastructure that supports it, whether it is the extent to which we have arrangements. And one other thing, which I don't want us to lose sight of, because I know we have limited time, right, is the extent to which what has happened, because it has happened, we can't change history, right? But the extent to which what has happened creates opportunities for us to rebuild in a different way, in a way which facilitates the lessons that we have learned from the experience, right? In a way, whether it is the pace of access to financing, how they access liquidity, what are the needs of the banks, for example, in terms of being quicker in responding, whether it's from an assessment perspective, right? Whether it is from a liquidity perspective, whatever the issues are. But there needs to be some sort of synthesis of the experience and what we have learned from it, right, to inform the way in which we organize ourselves going forward. Otherwise, we don't learn the lessons of history and run the risk of repeating them. Because my suspicion, and I think the suspicion of a lot of people here, is that climate events are something that we're going to be experiencing, significant climate events from time to time. And so we need to build a tourism ecosystem, is how I would describe it, that is resilient and that recognizes all the downside risks and puts in place a framework for managing them as best as possible. And I think there's a lot of opportunity in that regard.
Okay, thank you. Chris, how can the recovery efforts, I'll ask Chris first and then the minister can respond. How can the recovery efforts be leveraged to build a more inclusive tourism economy, particularly for the MSMEs, which form a large portion of our economy? So how would you want to see the recovery efforts tailored to assist in the tourism resilience?
I think following on what Patrick was saying, we have to move in a direction towards ensuring that there are some funds available. I didn't know until just now that GK is offering this particular insurance, but that was one of the things that I made a mental note of, that is so important, because and to look at how we can reduce the cost. I don't want to be repeating, but those are some of the elements that face us as businessmen and hoteliers in particular. You have the same issue too of this on insurance and so on. So if we can move towards establishing, and this thing of build back better should not be just a mantra, it should be institutionalized, so that you say if the hotels are building back, they must meet certain standards that are going to ensure that we can perhaps drive down insurance costs, because the insurance may be tied to the ability or the preparedness of the property or the attraction, that they have these particular things in place. An insurance company could perhaps look at it and say, okay, there's less risk involved here. Let's look at lower rates and so on. So I think those are the pathways that will benefit both us, not just as the business people, but for the wider community, and the people who have homes and so on should benefit as well. Okay, thank you. Minister, you heard the suggestions of the private sector and the tourism sector in particular. We hear about NARA, we see NARA, but we would want to know what's to the best of your knowledge, what is the plan? Where are we starting? Our businesses and our investors need to know how to prioritize.
pointed out, with the examples of what has happened with other natural disasters and the effects on countries, Katrina, the Haiti earthquake, the Nepal earthquake, the Hurricane Maria, and so on. We didn't want to repeat the mistakes that other jurisdictions made. So we had set up a literally implementing machine called NARA, the National Reconstruction and Resilience Authority, which has tremendous oversight. You can have a committee that gives it oversight, headed by Stanford professor Peter Blair Henry, who sits on the boards of Citigroup and Nike. So he has a lot of reputation, a lot of credibility. And of course, you have cabinet, we have the media, we have the Auditor General, we have the Integrity Commission. So there's a lot of oversight for it. And essentially, that entity will be an implementing machine involving procurement, coordination, getting projects executed, and the primary focus areas, of course, will include road infrastructure, which is important to catalyzing business growth and development, private sector related projects too, of course, hospitals, the redevelopment of Black River, Falmouth, and a significant array of other projects that will inure to the benefit of the broader economy, including micro, small, and medium-sized enterprises. One of the challenges, of course, with this, Tom, is its destructive effect on the rural economy of Jamaica. In Western Jamaica, a lot of small and micro businesses have literally been wiped out. And we have to figure out ways to get them back online. And Development Bank of Jamaica, Ministry of Industry, Investment and Commerce, and key stakeholder groupings have been working together to see how best we can give support to some of them to get back up and running. But in short, the overarching architecture is really to get growth and development going in the economy. We fear stagnation, which is why we had to show that we're moving fast. We're getting utilities restored, roads cleared, airports opened, and so on. And now getting into this phase of reconstruction, climate smart, resilient reconstruction that would drive confidence, drive interest, drive development, drive growth, and keep us on a path of optimism going forward.
Okay, thank you. The other question is regarding the government incentives now. Certainly government will have to lead the way in terms of sort of jump-starting the economy. What government incentives are there? Whether it is, I don't expect fiscal,
Yeah.
but what is being done to incentivize like the MSMEs and the tourism industry, etc., to assist them through this difficult period?
So a couple of things. One, NARA will have a Fast Jamaica mechanism within it for strategic investments. Those are fairly large. I think the base is $15 million US. So that's clearly significant. Minister Favor Williams and the Prime Minister, Minister Hill and so on, have been actively discussing along with Cabinet other measures to put in place to support micro and small businesses in particular, to get them up and running. The Development Bank of Jamaica is playing a key role in that. But beyond that is also engagements with the tourism space, with Minister Bartlett, JHT, other stakeholders, to find unique ways to ensure that we can ensure businesses are supported from a technical and financial point of view.
We don't have time for the bureaucracy, though.
I know. This is why we have NARA in part, which has a sunset clause. Is going to literally shut itself down because we don't want it to become another part of the bureaucracy. So it should die or self-terminate in maybe 4 years. But yes, we don't want to see any more bureaucracy, but what we want is enhanced efficiencies, certainly with the Development Bank of Jamaica, JBDC, and so on.
Okay, all right. Thank you for that. The landscape now, as it exists, for more innovation in financing. Financing first, and development second. Christina first with the financing part. I mean, the landscape is not what it used to be. The purchasing power of the economy is not what it used to be. So what are the innovations that can be offered to bring us back to that place of resilience and further development?
Yes, you're correct in terms of saying we have to change the way that we do things. I would say consumer behavior is recovering, but it's in a measured way. And I think, as Mr. Hilton said, these climate events are no longer seen as, one-off or something that happens few and far between. We had Beryl, 1 year. There was a space of 1 year between Beryl and Melissa. So consumers are becoming more considerate of these events. What we're seeing is persons want to mitigate their risk a little bit more. So in terms of risk tolerance, they're looking at ways to mitigate their risk. So we're seeing a lot more requests for insurance, business interruption insurance, property insurance. On the investment side, we're also seeing the importance of saving for a rainy day. So for instance, at GK Capital, we have professionally managed funds, whether through a pooled investment or financial advisors to help you manage your investment product. Businesses are still cautious, but as I mentioned earlier, on the investment banking side, we're committed to developing products and financing solutions that can help with this rebuilding. We can be as flexible as required. We see the liquidity, we see that we have the access to capital, and we're willing to work with businesses and consumers to raise whatever financing it is that they need. And the positive side is that we see that the consumers are picking up on the early positive signs, the positivity in terms of the labor markets, positivity in terms of earning. And whilst businesses are, more cautious, we still believe that there is room for improvement and growth.
Thank you. Patrick, from the private sector perspective, the organization itself, is there any opportunity now for mentorship of your members to get them through this situation? Like the Jamaica Chamber of Commerce, I'm sure you've had an increase in small and medium business membership. And so there's an opportunity there to develop and help those persons through this challenging time. Is there anything particular that the PSOJ is doing to nurture, mentor, and guide its members through this difficult time?
Yeah, the PSOJ has been doing a lot of work in terms of mentorship of its members. As you have said, we have had a significant increase across the spectrum, right? Not large members, the MSMEs, small members, individual members. And we have a responsibility to bring value, as I've often said to my team, to all of them in a tangible way, right? So mentorship is one way, and we have a number of programs through various committees and so on that work and disseminate information and so on, and have meetings with the various committees, with the various groups, sorry. But one of the things that I think is also important, is impact, right? And one of the ways in which we can drive impact beyond even mentorship is about what kind of arrangements to put in place or help people to put in place to deal with whether it's a crisis or some unexpected set of circumstances. And I remember in another place where I had a particular role where I was associated with an insurance company, I used to say to them that I want us to be able to plan for, with certainty for a particular outcome. And they would say to me, they can't do that because we could have an unexpected climate event. So I said, well, plan for an unexpected climate event. If it happens, we're prepared. If it doesn't happen, we benefit from it, right? We have the benefit of having planned for it, having made, whether it is put aside reserves, whether it is that we have, put in place infrastructure, whatever it is. So there is no downside to doing that. And I think that, as an association, we are and we have to continue to remain focused, and we have to engage more with our stakeholders to better understand what are their true needs, not so much our perceived needs, and look at ways in which we, through our networks and the infrastructure that we have, can assist them in preparing for and in dealing with, and not only dealing but also thriving through difficulties and challenges. The
Chamber actually has a grant program, which I would encourage persons who have interest to investigate. We realize how difficult the times are. But closing comment from you, Patrick, in terms of encouraging your members, especially the MSMEs now who are going through difficult time accessing capital. Your words of encouragement to get them through this difficult period, what you'd advise them to do. Same question will go to Chris and the Minister.
I mean, I want to, again, you know, we start, I start out with confidence as being a critical enabler of performance, right? If you look at, I don't know any successful pessimist. I can learn, but I'm not aware of any, right? And all the, whether it's at the personal level or at the corporate level, the institutions or individuals who are successful have started out with a very positive disposition, right? Because what it does, it affects the filter through which you see things, right? And the framework and your mindset and your preparation, right? So I'm saying one thing, let us start off with hope, right? A positive disposition. Let us then move beyond that, because hope in and itself is not going to create the value or create a set of circumstances. Let us move beyond that and start to understand better what the real needs are, right? Whether it is us as associations, the individuals themselves, properly understanding their circumstances and what their real needs are. And then let us see how we can help to facilitate, right, the meeting of those needs. Whether it is through advocacy in dialogue with government or various agencies, whether it is through mentorship, as you mentioned earlier, whether it is through education in terms of, you know, bringing in expertise to provide guidance and so on, and put in place all of these things to help our people, and by our people here I'm talking our membership, right? And beyond that, because the spillover effects of the deer, our country in making a successful transition. And I believe if we can start with a kernel of this, you know, whether it is in the PSOJ, the JCC, the GHTA, etc., if we can all work together in a very positive and constructive way, right, we can build and create an ecosystem and a momentum that helps to lift everybody. As I say, a rising tide lifts all boats, and I think we have the opportunity to really work together in a very organized way to help to facilitate this. And I'm encouraging that sort of approach, you know, since I have the platform to do it right now. I'm looking at Emil as I speak, and Chris.
Thank you, President. President Chris, similar question. You know, what can you do how would you encourage your large hoteliers to open back earlier?
I think that's a question for the Minister. not this one.
and generally speaking, the players in the tourism industry, led by the hoteliers, what is your word of encouragement as we close?
Much of what Patrick has said, I want to echo. And I think it's exemplified by the panel here that we want to work together. And I think notwithstanding the challenge that the hotels and attractions, I dare say, have with respect to insurance and other challenges like this, I think we should look to phasing in their operations. I know that some of the larger chains have chosen to open next year. We think that there is always a better way, a more inclusive way to do things, and so we'd like to encourage those members and those in that industry to look at phasing in the operation. I think this buoyancy will be good for us all. And as we spoke earlier about airlift and other things that would follow along once we see the rooms. As I said, build it, they will come. I think in this situation, once we open the rooms and the industry seen to be having enough available rooms, again, notwithstanding things like Airbnb and so on, filling the gap, we still have a shortage. So we want to look at how quickly we can fill that gap. And I think the quicker we can do it through our linkages network at GHD and the cooperation with JTB and the government and PSOG and others, I think we can get there much faster.
Thank you. Thank you very much. Minister, you're open the batting. You can now close the innings as well. Thank you very much.
Well, in every crisis comes opportunity. And I think this is a momentous opportunity for Jamaica. Patrick said we have to also move beyond hope. Fully agree with that. We need momentum. I think NARA will give that momentum. It will have a catalyzing effect on how we think, how we view life, how we view the future of Jamaica, the road infrastructure, the town redevelopment projects, the hospital projects. If they get off the ground, and I hope they will, I think we'll have a big effect on the country. Our international investors are also still bullish. Grand Palladium is still adding 950 rooms to their resort in Hanover. That's a huge $400 million US project. Moon Palace is moving forward with their 1,200 plus room project in Montego Bay. Unico is finishing their 500 plus room project in Montego Bay, hopefully at the end of this year or the first quarter of next year. Hard Rock is still on track. Harmony Cove is actively on the ground. Bahia is moving forward with their expansion projects. And even the airlines, Wingo out of Colombia started flights between Bogota and Montego Bay. They're now adding flights from Medellin, Colombia and Montego Bay. Virgin, as of June 1, will be having daily flights between London, Heathrow and Montego Bay, Jamaica. And Breeze, a new airline in the United States, will be having non-stop flights between Tampa and Montego Bay. So the confidence is there that Jamaica is on a growth path. And if international investors are willing to risk money by actually following through on their investments, following through on the expansion, it means they have confidence in Jamaica. And we should have confidence too.
Thank you very much. Sounds good. We're leaving on a positive note. Christina, you hear the opportunity. We just need like a bridge financing until it so work on that. Ladies and gentlemen, we have come to the end, and I want to just first thank the presenter, main presenter, Don Anderson, for again putting some excellent information together. Continue the hard work. I'm sure that when you went back this quarter versus the last quarter, some of the persons, the door-to-door things that you did, I am assuming that you found more people now available. People you couldn't find last quarter were now available to participate in the survey again, which again is a sign of further progress. So thank you very much. To GK Capital, our sponsor, our hardworking, dedicated and committed sponsor, we thank you again. Sean, thank you for your comments and your welcome. To my distinguished panel, Minister Seavright, Honorable Patrick Hilton, Ms. Christina Millington, and of course, President of the JHTA, Christopher Jarrett, thank you for your time today. And we trust that everyone here and online found the discourse interesting and helps you to guide your own investment path. Thank you very much, ladies and gentlemen.